Investors and traders, welcome to the channel Market Track Pattern. Today we'll be taking a look at some of the key banks, major US banks that we have been following for quite some time. Before we proceed with the video, this video is for educational purposes only. It is not a financial advice. So guys, let's start by taking a look at the XLF. This is the Spider Select Fund of financials. So the last video which we had done on the banking stocks, and we also looked at major key banks sector ETF. We had discussed that perhaps it looked like there was buying coming into the banking stocks, and that could propel the price of overall major averages higher. And this is what we have seen in the past week. We have seen really good moves in the S&P 500, Nasdaq. So just looking at the XLF, we had identified this brown line as a key point for support. And although we have this larger ABCD going down, but this level was a pretty good support level because it's kind of a double bottom here. We had a nice bottom here and a rally, then we had some support here, a brief rally, and then finally a push lower, and price just boom, moved higher, closed very positively, and then we had a really nice rally right going up to this 61.8% Fibonacci retracement. So what it looks like is that the XLF is on its way to this 38.2% Fibonacci retracement right at the 3263 level. So we're just gonna mark it. Here we go, boom, there we go. 3263 is what we are watching. It's possible it might just get there. Now let's take a look at the KRE, which is the regional banking stock index. This is the one in which we would expect the SVB, the Silicon Valley Bank, to be here. Other small banks, regional banks, are part of this index or ETF, excuse me. And here what we were watching for was this pattern formation right here, coming into about 46.14. We would have a nice ABCD formation and 61.8% Fibonacci retracement right here. Price in fact did go here, but in fact moved lower, and it seems to have found some sort of a support between the 61.8% Fibonacci retracement and 78.6% Fibonacci retracement. Here it's just consolidating here. It's just not moving higher too much, not moving lower. It's just moving in a sideways range. What we could expect is if we are going to see strength and buying coming in the banking stocks and the XLF move higher, that's going to be a positive sign. But this is what we are watching. On the lower side, the next support is likely to come at 38.34 to 78.6% Fibonacci retracement. Let's take a look at some of the major stocks. So here we are looking at the stock of JP Morgan. It is one of the biggest banks in the United States. Here we had identified the 38.2% Fibonacci retracement coming around the $127.87. The price did briefly move lower. Then we had seen a snapback, and it's just at the moment trading higher, just above this level. So this is what we are watching in JP Morgan. If it's going to be a if it's likely to rally from here, then this is a pretty good support level at 38.2% Fibonacci retracement. So we are watching how the price will act from here. At the moment, it's just moving sideways in a consolidation. Let's take a look at the Bank of America. So guys, this Bank of America stock has been one of the weakest stocks in the major US banks that we have been looking at. We do have a pattern formation which could actually see the price move as low as $18.87 right here. Maybe perhaps that might be a double bottom. But for now, what we have seen is that right from the 38.2% Fibonacci retracement, stock found good resistance and it's moved lower, and it's just sitting a little above the 78.6% Fibonacci retracement, above the $24.80 level. It is just consolidating here, but it has the pattern formations have been one of the weakest one for this stock. in this bank. All right, so let's take a look at the Goldman Sachs. So guys, Goldman Sachs has actually been one of the strongest banking stocks that has had a nice pullback after reaching the 78.6% Fibonacci retracement right at $310 per share level, thereabouts. We do have a pattern formation which could actually see the stock trade lower to around $242 or roughly $243 per share level if it gets down there, and that is likely to be a pretty good support because of the confluence of a number of things coming together just right here. So that pattern is what we are watching. But for now, the stock has found some support right from the 78.6% Fibonacci retracement. It has had a nice rally higher, and the stock is kind of I would view it more like a consolidation right here. On the resistance side, if we just take a look at the stock is very close to its 38.2% Fibonacci retracement at around $331.80. Should it get there, we'll have to watch the price action very, very carefully to ascertain what the price is likely to do next. All right, guys, let's take a look at Morgan Stanley. Excuse me. So the Morgan Stanley has been one of the better US banking stocks from a chart pattern perspective. And what we have seen is that price came right into this trendline support here, and also the 61.8% Fibonacci retracement. And as mentioned in the previous video, here the price is actually moving higher over the past few days. And this is what we have discussed in general, that it appeared that the banking stocks were going to get some sort of rally, and that was going to also help the overall market. And this is exactly what we have seen over the past week. So what we are looking at is the 38.2% Fibonacci retracement coming around $89 per share level. So that is the level which we will be watching. Let's just mark it right here. Here we go. Okay, so guys, what else? We have the Wells Fargo. Let's take a look at that one. All right, guys, so this one is an interesting one because this stock, as we were watching, found support right at the 61.8% Fibonacci retracement. It has, just like the other banking stock, kind of moving higher or consolidating. But we do have a pattern formation which could actually see it trade as low as $29 and even a little bit lower. What we are watching for is this $40.35 level, which is this 38.2% Fibonacci retracement. If the stock begins to move higher from this 38.2% Fibonacci retracement, that would be fairly positive. But as long as it stays below actually this pattern of ABCD and $29 per share level cannot be ruled out. So guys, this is what we are watching in the US major stock banking stocks. If you like our videos and our analysis on how we look at the market from a technical analysis perspective, using key Fibonacci ratios and also key pattern formations, then please do subscribe to this channel. If you enjoyed and like the video from a educational perspective, then please do hit that like button. It just encourages me to keep on making more videos, because I find that people do like the videos from an educational perspective. So thank you very much for watching. Good luck and good trading.